the NASDAQ down more as the tech stocks really take the brunt of the losses here. And then the small caps down just about the same as the NASDAQ. In terms of the opening bell, you've got Smart Chem ringing the bell down at the NASDAQ market site. And American Water, what an important resource that is for us here in this great country, ringing the bell at the New York Stock Exchange. We're really focused on the problems that we're seeing out of earnings. You've got these big bellwethers coming out and printing bad numbers, and really it's all about tariffs, which is what spooks market participants. You can see the cash trade here. This is no longer futures. We're still down 0.8% on the S&P, 1% and more on the NASDAQ 100. But it's a company like FedEx, an old economy company, really. This is a Dow Jones Industrial Average company that cut its guidance for the full year again. It's the third quarter in a row that FedEx has cut its guidance. That's no bueno. And as a result, the shares are decimated here. The concern is inflation and tariffs. And this should be, well, it's Mr. Market talking to the White House, really.
It is brutal. There's no other way to cut it. And, you know, also brutal over here, I'm taking a look at Nike. Matt, it is down 7.3%. Remember, the turnaround effort now hitting snags. The company's trying to clear out old inventory while feeling the effects of a growing trade war. So tariffs, they matter here as well, but also a highly watched turnaround story for another iconic brand in the United States.
Yeah, paying very close attention to that as well. Let's talk about all this with Wells Fargo Investment Institute's head of global investment strategy, Paul Christopher. Paul, I wonder, you know, what you think about these tariff issues. The president and Scott Bessent would say, okay, we're going to have a little bit of short-term pain. You know, we're going to go through a detox, but we're going to come out of it on the other side much stronger. We're really going into a golden era for American business. Do you agree?
Well, we'll have to see how the longer term plays out. But our forecast horizon through the end of this year envisions some adjustments by companies. And we need to remember, too, that those reporting earnings may or may not be among companies that could make maybe the most profitable kinds of adjustments to tariffs. For example, you've got companies that do business in China. Chinese companies' factories are weak right now, so you twist their arms and foist more of the tariff burden onto them. Or maybe you've got U.S. companies that have more than one supply chain. Those have been building up since 2018, and they got really going into after 2020 with the diversification of the supply chain. So some industries and some companies are just a lot more flexible than others. So in the short run, we think tariff impacts on the economy will be blunted and diluted by these kinds of adjustments. Look, you put a tax on somebody, they're going to find a way to adjust around it. And the question is, how long does that take? We think the blunting and the diluting of the tariff impacts will incrementalize the tariff impacts so that by the end of this year, we think the economy is still growing. We don't think that tariffs derail the economy, not from a growth standpoint or from an inflation standpoint. So we'd be looking to buy here.
Shanali, I just want to break in for a moment and say that Paul makes a great point about companies. These are very smart people running the biggest companies, right? And they're going to figure out a way to deal with these tariffs. But for smaller companies, for the small businesses of America, it's really different to tailor your supply chain. It's really difficult to figure out a way to deal with these tariffs. And we have a great guest on, Mike Matthews, later in the program to talk to us about those small businesses.
Yeah, I am very concerned about the small business story, especially because that was a big moment of excitement. After the election, people looked at small caps. I actually want to look at the bigger companies still, though, with you, Paul, because if we can take a note from the micro to tell us something about the macro. You heard from FedEx this morning. Not only is it a bellwether, what it told you was that there's B2B issues, there's industrial companies facing issues based on what FedEx had said. So did it tell you something, or does it tell you something about where we're seeing weakening in the economy at the moment that should be a bellwether into what other problems you might see ahead?
Well, again, what we're seeing is extrapolation. So tariffs are pretty new. They're pretty, in some cases, still fluid, on again, off again, right? Like in the case of Canada and Mexico. And what we're seeing investors doing is extrapolating into the future and saying, well, these are going to be bad, so therefore we're going to sell the stock today. On the other hand, the other piece of it that we're seeing, or we saw in January, was a very cold month, and a month in which we saw some people already pull their expenditures forward into December from January, and so there's extrapolation going on there too, based on that first month of the year. That, oh well, the rest of the economy is already weak, and tariffs are going to throw it into recession. And again, correlation is not causation. So let's see what happens here. But we're seeing some price increases, but not by the amounts of the tariffs. We're seeing some tariffs that are coming on and some tariffs that are going off. So we still have a fluid situation there. And it's probably best not to extrapolate too much. We think that adjustment period will really tell here. And just as we saw in 2018 and 19, and again in 21 and 22, or excuse me, 20 and 21 with tariffs, we think there will be adjustments made. And that's why we think the economy has still plenty of strengths to drive it forward.
And the market, I mean, typically bounces back from these things, right? I mean, I try to be skeptical, Paul, but I look back at the correction that we've had, and I see pretty much the same thing happened in the summer of last year. We were talking earlier about a JP Morgan data set that shows retail investors are still piling in here. Are they going to get burned, or does buying the dip at 5,700 make sense when, you know, the average strategist estimate for the market at year end is still almost 6,500?
Yeah, buying the dips in the middle of a correction, that's always a tricky sort of business. They call it trying to catch a falling knife. But we do see the market trying to stabilize here, the S&P around 5,550 to 5,600. We've seen some pretty good up days lately. What we really need to see is some up days with really broad-based momentum across the sectors and good volume. And we're already starting to see some of the institutional money come back into the market. So is this the bottom? No, maybe not. We do have triple witching today, so you've got some downside risk there too. But we think fundamentally the economy is still sound. So we would be looking to maybe put a little bit of money to work here and a little bit of money to work back at 57, 5,800. You see all the way back up. No sense in risking all the chips if we're still heading down as part of this correction.
We should point out what triple witching is, right? And it's the expiration of contracts on a whole bunch of different futures. I can never remember, but it's like single stock futures, index futures. What is it, Paul? How does triple witching go as opposed to quadruple witching day?
So you've got futures, you've got indexes, and you've got individual stocks, and all of those come due today. And with all of the volatility in the last couple of months, there's been a huge pile of options that have piled up, and today is the expiry day. So if markets are already jittery, you could expect some more jitters before today is out. But we do take some comfort in seeing some early attempts, what we think is it's stabilization in the market.
And to the point you're making, a lot of people have been looking to the options market to reflect their point of view. Now, one other question I have is going back to the small business part of the story, because you do see a Russell 2000 index that's down more than 8% this year. That is worse than the S&P 500. It's worse than the NASDAQ 100. But you do see an S&P 400 mid-cap index actually doing better than the NASDAQ 100 and the Russell 2000. I'm wondering, to the extent that you want to stray away from those really large cap stocks, if there's a place to do it, or if you still have some fears that maybe rates are not going to go down as much as you thought, or growth might impact these companies, or taxes might not be as low as they'd like.
Yeah, you put your finger on right there with the rates. We went to neutral from underweight on small caps last fall. And by the way, everyone remember the Sahm rule? After that labor market report late last summer, everyone was convinced we were going into recession. But not so. It's just a normalization of the economy. But having said that, yes, small businesses still are on the hook here for interest rates that have not come down by as much as they would like. So that's why last week we made a move in our guidance to go overweight mid caps. If you think about it, mid caps are like large caps, but they're going to hold up better. They're holding up better here in this pullback. And we think, if you're going to have tariff issues where U.S. large companies can't necessarily tap their Canadian and Mexican suppliers anymore, some of those mid caps, especially metal benders, might really step up into that breach there and could do well. So we think mid caps here, an interesting shadow to large caps, and we would look for them to outperform as well over the coming months.
Paul, we thank you so much for your time. That is Wells Fargo Investment Institute's Paul Christopher. And really quickly here on the whole options expiry thing, Matt, it's interesting. If you're reading the MLive blog, what it'll tell you is, yes, today's could be volatile, could be a little scary, especially with the earnings that you're seeing over here. You do have the potential for a further rally in the S&P 500 into month end based on how these options are set up.
No, absolutely. Well, first of all, when we get there next week, you'll see some window dressing at the end of the month.
Exactly.
But yes, also these triple witching or quadruple witching does cause a lot of volatility right around 1 o'clock. I always forget why there's a subtle difference, and that's because if you had single stock futures expiring, it would be quadruple witching as opposed to triple witching, but we don't trade single stock futures on U.S. indexes anymore, so that's like a thing of the past. You're dating yourself if you talk about quadruple witching.
Yeah, well, you know, there's a whole other thing now that we should one day talk about. That is that zero-day expiry situation going on. Anyway, some movers on our radar here. We're looking at Carnival Cruise extending losses, and that's despite raising its guidance for the year. It's now down almost 5%, at least more than 4.7%. But Lockheed Martin is higher. Bloomberg reported that the White House will make it the winner of its contest to build the next generation fighter jet. And Matt, we're also watching Lennar because it's struggling. The home builder does see pressure from consistently high interest rates. We're watching that housing market very closely. It ties into all those other things we're talking about with the U.S. consumer.
All right, I am looking forward to the announcement of who wins the next generation fighter jet contract, and I guess we're going to hear that officially out of the White House, at least in the next couple of days. So we look forward to that, and that'll definitely move either Lockheed Martin or Boeing. Coming up, we're going to talk about Tesla. It is on pace for a 9th straight week of losses as trouble and turmoil continues to escalate for the company. More on the EV maker next. This is Bloomberg.
And it's time now for our top calls. Some of the analyst action in focus this morning. First up, we're looking at Adobe, upgraded to sector weight at KeyBank. The analyst is saying that he doesn't see much room for downside for the company, for the software company in the future, but we do see Adobe still down 1.6%. Now, next up, Supermicro is getting an upgrade from JP Morgan to neutral from underweight. The analyst is saying uncertainty about the pending SEC filings may now be behind it. Supermicro now up almost 2%. Finally, JP Morgan is cutting its price target on Micron after the chip maker delivered a disappointing margin outlook. The analyst is saying that the setup for the second half of the year still remains strong. Matt, you are seeing Micron down brutally, about 7.6% this morning.
Yeah, there's a lot of brutal going on today. A lot of those big 8, 9, 10% drops. One of the stocks that's not putting up a move like that today is Tesla, although brutal is a great word for what's going on with this company and the stock. It is set for its 9th straight week of losses as backlash against the car maker and its CEO, Elon Musk, escalates. Protesters are vandalizing cars and even throwing Molotov cocktails at Tesla showrooms. And protesters isn't the word that the Attorney General would use. Pam Bondi has said domestic terrorists. For more, we're joined by Vijay Rakesh, Mitsuo Securities Senior Analyst. He has an outperform rating on the stock, a $430 price target. And I mean, without talking about the drama surrounding the terrorism, what do you say, Vijay, about the company's losses? I mean, half of its market cap has been lost in like 3 months.
Yeah, thanks for having me on, Matt. I think definitely it's been brutal in Tesla, to say the least. But I think as you look at the fundamentals of the stock, I think we continue to see calendar 25 shipments flat year on year, which could be a challenge Q1, where sales on shipments have been for the first 2 months of the year thus far. It's underperformed in China and Europe, especially, and also in the US. So there's definitely some challenges here. Some of it might be a little bit of a I think some politicization of the trends there. But that said, we think they should still have a pretty good second half. There's obviously some headwinds with EU kind of rolling up all the CO2 emissions that they had, CO2 emission guidelines. So that takes out some of the urgency to be shipping out EVs in Europe as well. But yes, Tesla sales have been pretty soft, to say the least, in China and Europe especially. So
I want to point out, Vijay, I want to point out what Elon Musk was saying in the all hands to his own staff at Tesla. He said, if you read the news, it feels like Armageddon. According to a broadcast late Thursday, he referred to what's going on as a little bit of stormy weather. What he said was, the point he's making is hang on to your stock. But if you're a Tesla employee, the stock is down 50% from its highs. You're looking at the other Elon Musk enterprises like SpaceX, where the valuation has been soaring, or even X, where the valuation is pretty much where it was when he bought it. It has risen back again. Then wouldn't you be a little frustrated that you're holding Tesla stock and not something else he's made?
Yeah, definitely, Sonali. I think when you look at the volatility in Tesla, it's definitely not for the faint of heart. But I think the point also is, as you look into the back half, we have a Model Y starting to pick up. There is a lower cost Model Y version that should come on in China and the US. And so that should help drive some of the sales in the back half. But, definitely there have been significant challenges, and it is definitely a little bit of a headwind to morale, and that does not help. But again, even when you look at some of the things that they have said on the robotics side, you're now seeing NVIDIA talk about robotics as a 50 trillion industry that, obviously Tesla started talking, and now you have one of the big bellwethers in the tech market, NVIDIA, also talking robotics. So there are some, tailwinds starting to emerge. Obviously, the core EV business has not been good, as I mentioned, in US, Europe, and China. And so we think going to the back half, a portfolio refresh will probably help. So.
Well, you have the President of the United States doing an infomercial, which is helpful for your product. And the Commerce Secretary giving investment advice, telling investors to buy the stock. So those two things, that's tough to get, that kind of publicity. Let me ask you about a different company. I want to talk about Micron for a moment. The company came out with better than expected earnings and also gave a decent outlook, and yet the shares are down. Why do you think Micron is doing poorly? Is this just a part of the broader kind of AI malaise?
Yeah, definitely. Some of the sentiment on the AI side has cooled. Some of the investor sentiment has definitely cooled off, as you can see from the valuations and multiples on the leaders in the space, from NVIDIA and down. And so I think some of it is that. But I think if you look at Micron, they have executed very well. On the HBM side for AI, their revenues are growing 100% of the back half and 100% year on year into 2026. So we think they are doing very well on both HBM DRAM that goes into AI servers, but also on the NAND side, where they are starting to ship into AI servers with SSDs. There's been a little bit of focus on the margin side, margins being down a little bit here into the next quarter, but a lot of that is driven by some more consumer mix, some underutilization on their fabs, some startup costs. But I think that people might be missing the big picture, which is that their execution on AI servers, on HBM, on NAND has been very solid. So we would actually look to be using this weakness to get add to position. We obviously are evaluating. We like the name here. We think the roadmap looks pretty solid for that.
Yeah, the margin miss is it's pretty small, right? They forecast 37.9% for the second quarter, and analysts are looking for 38.4%. So it's only 50 basis points, but I guess you have to beat in this market.
Yeah, absolutely. Certainly getting swept up in the sentiment. Vijay, we thank you. That is Vijay Rakesh of Mizuho. And real quickly, too, I just want to point out here that not only is Micron the worst performer on the NASDAQ 100, just NVIDIA is down another day. It's been a tough week on sentiment. It's down more than 4% this week. It's had worse weeks, but of course, dip buyers certainly waiting for that rebound.
Over the past 5 years, Micron stock has returned 172%. That's better than a stick in the eye, but NVIDIA has returned 2,177%.
Yeah, and we'll talk about it later, too. There's an IPO in waiting here. CoreWeave is actually backed by NVIDIA, so we'll talk more about that a little later in the show. But coming up, equity funds get their largest weekly inflow of the year. We're going to take a look at that in today's strategy session next. This is Open Interest.
Welcome back to Open Interest. Let me give you a snapshot of what's moving today in these markets. Almost a half hour into the session right now. We're looking at a lot of red here. The S&P 500 down 0.8%. The NASDAQ as well. We have the VIX up, so that's not an up arrow story, but there's an up arrow at almost 21. The Dow Jones Industrial Average, I'm glad we include this for the old guys out there. Micron, we were just talking about the memory chip maker down big. NVIDIA down 2%, which isn't a lot, but NVIDIA itself is so big. And then here's some of the reason. FedEx and Nike out with earnings that really disappointed. Carnival also off after coming out with earnings an hour ago, and Lennar down on earnings as well. The 2-year yield right now holding firmly below 4%, and the 10-year yield at 4.21. So actually down about 2.5 basis points. Sonali, what are you watching?
I am watching this note from Bank of America because they're seeing that global equity funds have had their largest weekly inflows this year. And that's the subject of today's strategy session. Now, if you take a look, equity funds globally have brought in $43.4 billion, with a meager $4.9 billion relatively into bonds. Gold only $3 billion. Crypto had a tiny little baby bid, but you know, really the idea of global is the most important part here. This idea that Germany, China, the two top exporters to the U.S., they believe, according to this Bank of America note, that the reason they've rallied is that investors are skeptical that U.S. tariffs will cause a recession.
Yeah, absolutely. It's important to point out that that is global.
Yeah.
But here in the U.S., retail investors have poured $12 billion into equities as well. So they're buying as an institution sell. Coming up in the next hour, Ann Berry joins us and Mike Matthews. We are 30 minutes into the trading day. Welcome back to Bloomberg Open Interest. I'm Matt Miller.
And I'm Shonali Bassett. Katie Greifeld is off today, back in a couple days, though. And coming up, stocks slip as a batch of downbeat earnings fan fresh concerns in a market that's already grappling with the prospect of a damaging trade war. And that trade war is also causing challenges for small businesses like Electro Harmonics, a company that makes guitar pedals used by Jimi Hendrix. Mike Matthews is the founder of that company. He joins Open Interest today. And travel chaos. London's Heathrow Airport shuts down after a nearby fire knocked out power. Thousands of passengers are stranded. We're going to get a live report in just a few minutes.
All right, let's get a check on what's going on. Just at the index level here, we're seeing a drop of about 0.75% on the S&P 500. The NASDAQ down a little bit more. It's been worse this morning, and as we have been talking about, it is triple witching today, which means there's the expiry of some options and futures around 1 o'clock that could cause some volatility in the New York Stock Exchange. So you may see potentially a turnaround. Although we've got such bad earnings news, such concerns about the trade war, and real problems in terms of the market structure right now, that it doesn't seem likely we're going to end up positive for the week. Joining us to talk more about this is Ann Berry, Threadneedle Ventures founder, here with us at the desk. And great to have you on the program. I thought it was so fascinating that the two biggest earnings stories, Nike and FedEx, highlight the impact of the trade war so well, right? Because one is a global bellwether shipping all the packages that we buy or don't, and one sells products that are for the most part made in China, Vietnam, and Indonesia.
I think that's right, but I do think they've also got their own esoteric challenges. So the story today is all about how tariffs are hitting FedEx and Nike. The story 2 weeks ago, or 3 weeks ago, was how Nike was needing to do a collaboration with Skims and Kim Kardashian to get share back and to get back in front of the consumer. So I look at the outlook for these. Yes, today it's tariffs, but I think fundamentally they're in very, very different positions. So as I think about, do I buy the dip, do I not buy the dip, I have sort of different views on those.
Well, why do you buy the dip, for example? You were telling us in the commercial breaks for FedEx.
Yeah.
Why? Especially when there's so many uncertainties around the consumer. FedEx is also warning about the B2B business, industrials, so kind of broader pain there.
The reason I like it at the right entry price is precisely because of that breadth, Shonali. It's precisely because of that diversification. I fundamentally don't believe that the trade war is something that is going to be around for the full next 4 years, for example. We learned that from the last administration. I do happen to believe that the US consumer is ultimately fairly robust. Yes, industrials has been very disappointing. I do like the idea of a spin out for the freight business. So when I look at all of the different parts of the economy that FedEx touches, yes, it's a very difficult moment right now, but all it takes is some tariff reversal and we see that share price come back up again. So that's where I'm a little more optimistic on that than Nike.
Yeah, our Bloomberg intelligence analysts say the freight business could be worth $30 billion on its own. This is a stock that trades for less than, I think, $53 billion in total market cap.
That's a great point.
So that would be a huge spinoff.
Yeah.
Why not Nike? I mean, Nike looks like, even though they're going through a detox, right? There's going to be some pain, as Scott Bessent might say. The turnaround looks like it's underway. They've got a CEO that everybody likes. They're marking down the shoes that they have way too many of, and they're getting back on the shelves at Foot Locker and Fleet Street, or whatever it's called.
Fleet Feet.
Fleet Feet. There you go.
Because they're just not doing it fast enough. And I think they're just not doing it with enough originality right yet. So, the collaboration with Skims, I think, is very clever. Okay, I think that was a really important way to try and tap the female athleisure market. But if you look at their core shoe product, if you look at On, if you look at these other brands that have gained share, Nike just doesn't feel it has its magic at this particular moment. And so I think they're doing the right things. They're heading in the right direction. But I think it's going to be a long set of, they need a lot of wins, in my opinion, to get back to where they were. And perhaps we can see 1 or 2 right now. They're going to need a dozen.
I want to do this other thing this morning. We were talking just more broadly about all the negative sentiment out there. Yeah. Just took a look at the S&P 500 today. We were banking on a turnaround here because you were so close this morning to snapping 4 straight weeks of losses. We are now looking at our fifth week of losses. Every sector today is in the red. Every sector. So where do you think the negative sentiment is most deserved, especially when you see the Mag 7 in particular dropping this low. Every sector is in the red. Every segment of the Mag 7, is in the red. Everything, including Meta now, is all in the red.
So let's separate the Mag 7 for a second, because I think the Mag 7 is facing a very specific set of challenges this year. We've talked about it on the show before. The amount of money that Mag 7 has been investing in the AI story, to me, I think this is the year with all this uncertainty where investors are saying, now we need to get some hard numbers around all of this CapEx and all of the ROI. If we separate that out from the rest of the market, here's where I'm not surprised. And Matt, I remember I came on the show before and you said, which stock gets you really excited every morning? And I've said consistently, the market has been overdue a correction. I feel the market is now finally catching up to what Jay Powell said and what the Fed said this week, right? Worsening GDP outlook, stickier inflation, meaning that the ability to deal with a softer labor market isn't quite as strong as we would want.
Yeah.
The data's been staring us in plain sight, and it has been since the beginning of the year. So the fact that we've had a broadening sell-off and we don't get a snapback, not remotely surprised, and I don't think we're due one yet.
You know, I want to correct myself. Meta is marginally in the green, but that doesn't save the sentiment story.
Don't worry about it.
It's a
Don't
Friday,
worry about
man.
it. It's not, I mean, look, it's down year to date, right? So, all right, Ann Barry, you're going to stick with us. We're going to talk to you about IPOs. We're going to talk to you about tech. Right now, I want to focus in on a fire near Heathrow that's caused absolute turmoil for hundreds of thousands of passengers. This is the fourth most active airport in the world and the busiest in Europe. Guy Johnson joins us now from the ground. So, Guy, what do we know about all of the cancellations, all of the delays, you know, how long this is going to last?
We don't know, Matt. That's the problem. In theory, the airport's going to be closed until midnight tonight. It's been closed all day. You just told us it's the busiest airport in Europe. This is going to be something that lasts for days in terms of the effect that this closure is going to have. You've got aircraft out of position, people, you've got crews, everything's out of position. It is going to cause chaos for days. You can't even get into the airport today. All 5 terminals, there's police blocking all of them. You can't even get onto the road to drive into the airport. The police is blocking that. There's been all kinds of passengers walking around the airport. I'm standing on the sort of the peripheral road, trying to figure out what they're going to do next. It is absolute chaos. It is a huge embarrassment for the UK. This is critical infrastructure. It doesn't work. A fire a few miles that way has knocked out this crucial piece of kit, and it doesn't look like we've got any clarity right now as to when it's going to be fixed.
Yeah, I want to point out here, Guy, according to the New York Times at least, that there's at least 80 airlines that operate from Heathrow. What do we know about the disruptions? Of course, it's a major hub. It's a major place where you will stop before going to another country as well. How much of a disaster is the flight booking situation right now?
Oh, it's massive. It's a huge disaster. And I have to say, JFK flights have probably been the most affected by this. So it's that transatlantic route that's been most affected by what has been happening here. This is a key hub for that transatlantic route. But yeah, flights all over the world. So earlier this morning, when we first got wind that the story was happening, you take a look at Flight Radar, you can see flights coming in from the Middle East, from Asia. You've got the overnight flights coming in out of New York as well. All of those had to find new destinations and places to go. So they've been landing all over Europe this morning. That was the story first thing. Since then, it's just been straight up and down cancellations. And we just don't know how long it's going to last at this point and how long these aircraft are going to be out of position. So yeah, the chaos is absolutely enormous. So not only is this embarrassing for the UK, but there's also probably going to be a massive economic effect to this as well. You shut down a critical piece of infrastructure like this, it's going to have an economic impact just at the time when the UK could really live without that kind of a hit right now. So yeah, it's not only going to affect the passengers, it's not only going to affect the airlines that are in and out of Heathrow, but it's going to affect the economy as well. This is a major hit to the UK. One day closure to Heathrow, and the ripple effects are going to be absolutely enormous, Sonali.
Probably good for pubs and hotels that are near there, right? I mean, I know there's a Wendy's in Heathrow, which is delicious, but otherwise, what are passengers doing?
Matt, I don't know, to be honest. I've seen a few of them walking past us here on the peripheral road with their wheelie bags going click, click, click along the pavement. But they can't get into the airport. Honestly, you know Heathrow, okay? I'm sure we all know Heathrow. You can't get in. It's not like you can turn up at the airport and kind of go and find somewhere to sleep. You can't get into the airport. All of the terminals are closed. Terminal 5, which is the airport, which is the terminal that British Airways operate out of, that's on a separate grid. So that's at least got power, but you can't get in there either. So all of the major all the terminals are closed right now. So passengers are having to figure out what they're going to do next. Obviously, there's been huge numbers of cancellations, but trying to figure out where you're going to rebook and how that's actually going to work is still a complicated process at the moment, given that we don't know what the schedules are going to look like over the next few days. So passengers are in a really tough place right now. It's going to be interesting to see how the airlines ultimately deal with that from a compensation point of view. But at the moment, the strategy is basically just cancel as many flights throughout today and probably into tomorrow as well as they can, try and figure out what to do from there.
All right, absolute havoc. Guy Johnson, thanks very much. Guy reporting there live from Heathrow. It's an hour from Fulham, you know, if there's traffic. So if you've gone there, your flight's canceled, now you have to go back. It's 2 hours.
Yeah.
Hopefully you're in a black cab, which is at least comfortable.
There's good
right?
public transit. That's actually the silver lining. But of all the other infrastructure right now, that's a massive question mark, isn't it?
Yeah, absolutely. All right, we'll continue to keep you updated on what's going on at Heathrow. But coming up, it's one of the hottest startups in AI and the most highly anticipated IPOs of the year. We'll talk to you about NVIDIA-backed CoreWeave next with Ann Berry in our Wall Street Beat. This is Bloomberg. Let's get now to high interest. Look at what's making headlines around the world. German lawmakers cleared the final hurdle to unlock hundreds of billions of dollars in debt-financed defense and infrastructure spending, paving the way for its biggest rearmament since the 1930s. Investors have been closely watching the measures, which end decades of German austerity and usher in a new period of deficit spending designed to boost Europe's biggest economy and bring the fight in Ukraine to Russia. The CDU, the Social Democrats, and the Green Party are all committed to a massive military buildup after years of neglect, with incoming Chancellor Friedrich Merz saying defense contracts, wherever possible, should go to European manufacturers. And the White House today will announce the winner of one big defense contract, a contest to build the next generation fighter jet. People familiar tell Bloomberg it will be Lockheed Martin. President Trump plans to make the announcement with Defense Secretary Pete Hegseth after Congress's 4 defense committees were notified by the Pentagon on Thursday. The announcement will be made nearly 2 years after the Air Force issued a formal request for proposals for the full-scale development phase of the next generation air dominance manned fighter, or NGAD. That's intended to fly in tandem with drones that are being developed in a separate program. And CoreWeave has received orders for all of the shares available in its initial public offering. According to people familiar, the IPO for the NVIDIA-backed company is oversubscribed after early mutual fund support and one-on-one conversations, and an offering could raise as much as $2.7 billion at the top of the marketed range. The deal is expected to price next Thursday and begin trading on the following day, so a week from today, meaning it's very early in the process. The messaging is expected to be distributed as early as Friday. A spokesperson for CoreWeave declined to comment.
And that brings us to the Wall Street Beat. Still with us to talk more about the IPO landscape, and Barry, Threadneedle Ventures founder. You know, you have CoreWeave listing the trifecta of Wall Street underwriters. You have Morgan Stanley, JP Morgan, and Goldman Sachs. You don't always have all three to lead an offering like this. They did set expectations in that they initially hoped to look for more money in this IPO. So they've scaled back, but now they're oversubscribed on the first day, at least according to sources familiar with the matter. We know they like to drum up excitement.
Yeah.
Would you buy into an IPO like this? It's backed by NVIDIA. It's been a darling, but valuations have corrected.
Valuations have corrected, and the valuations have been frothy. And I think one of the key things on CoreWeave in particular, they have $7.5 billion of debt coming due pretty soon. So they scaled back the IPO, which means the cash proceeds coming in with which to address that debt maturity isn't as much as they thought it was, which means you better believe the growth story if you want to believe in a strong capital structure, and I'm not quite there yet on this one.
You know, we talk about IPOs on this show all the time and why there's been a dearth of IPOs. It seems like they would have done well because the broader market is up 50% over the past couple of years. On the other hand, a lot of people are only interested in investing in mega cap tech stocks and will ignore something this small.
Some of them will, but I think some lessons have been learned there, Matt. So do you remember the Reddit IPO last year at the beginning? And everyone thought, this is amazing. This is going to be the litmus test for whether it's back. And the Reddit IPO did okay, not great. And then do you remember the ARM IPO? It did sort of okay and not great. And yet both of those turned out to actually be great investments if you went in.
Yeah, I was going to say, Reddit, total return since the IPO, 223%.
Yeah,
I'd take that.
It's been a great run for both of those. And so I think the conventional wisdom would be people would have wanted to just stick with the mega caps. I think there's been fear of missing the boat, and those two are examples of it. So like I said, I wouldn't go into CoreWeave right now, but I wouldn't say I'm not going to look at IPOs and only focus on the mega
what about Klarna? Because that's the other whale in the room here in terms of potential future very soon listing. Would you buy that?
I actually do find Klarna more interesting, and here's why from a valuation perspective. The chatter on the IPO for the valuation is about $15 billion, which is right on top of a firm, right? Their revenues... They've been dueling. Their revenues are very close. I think Klarna came in just a little bit above for 2024. Klarna's doing some very aggressive things right now. The partnership they struck with Walmart, which announced this week, the partnership with DoorDash, we were chatting about it in the break, Shonali, I think is indicative that they're willing to go into areas such as food delivery and grocery, which hasn't been tapped as heavily, or those smaller BNPL players like Zip have been going there. And so I think Klarna actually could be pretty interesting. The other reason I think Klarna may be interesting, Shonali, and I'm wanting to hear this as they go out and market themselves. I do think this is a market that is going to be ripe for M&A for these tech businesses. And I think to have the currency, whether it's cash or whether it's stock to do it, I think this could be a really interesting year, particularly if we see some of these valuations and acquisition targets come down.
The fact that Klarna has a partnership with DoorDash.
Yeah.
This is wild.
Does that hurt your confidence in the U.S. economy? I mean, if people have to pay for a Wendy's delivery in 4 installments over the next year,
Yeah.
they can't be doing very well financially.
Also, does it say something about what Klarna is trying to get as customers? Are they kind of picking at the bottom of the barrel now? Should you be paying for groceries and for?
Well, BNPL has been going after groceries. So Zip's an example that's been going after Instacart. They're working with Costco. So it's not the Affirm and it's not the big brand names. But I do think there's a difference between consumers needing to pay with BNPL and choosing to pay with BNPL, right? So if that option's available to you, Matt, whether it's a Wendy's or whether it's a TV, if you have the opportunity to defer that payment, just time value of money, are you not going to choose to do that? So I hear you. I think where the art is going to be for these companies, are they actually offering the same BNPL options to all of their consumer base, or are they actually going to be slicing and dicing their data to have more customized, more personalized offerings based on what the assumption is for that particular user's credit score or credit worthiness?
So what would you like to see go public this year? I mean, frankly, this has been, to Matt's point, a drought. And to the extent that you would be excited about a company that's in the private markets that looks ripe, what are you not seeing yet?
Or do you care? I mean, does it not bum you out that we haven't seen as many IPOs?
Okay, so there are two different questions. For me personally, and this is specific to the situation I sit in, don't forget I play in the private markets and the public markets, which means I have access to investing in companies that are private and private equity owned. A lot of retail investors don't have that option, and so I think they should be disappointed that there isn't a more diverse set of IPOs. I think there are some very high-quality industrial technology businesses that are owned by private equity businesses. I think there are some very high-quality business services companies. They're going to stay private if the market doesn't open up to them. So this is where you and I have had this debate before. It's where I like being able to invest in private capital.
Well, although those private investors, private equity, they need an exit at some point, right?
Yeah, they do need an exit at some point, but you can choose your timing, right? You can decide, do you want to go out now when the world's feeling very discombobulated, or do you want to wait till some of this, hopefully tapers away?
We said in this morning's meeting that we never have enough time with Ann Berry.
Never.
Do you?
And
thank you.
Even over
That's
2
lovely.
blocks. No, it's great having you here. Thank you so much for joining us.
Thanks for
Ann
having me.
Berry there of Threadneedle Ventures. Still ahead, Carnival's latest results add to worries that a travel slowdown has spread to even the most robust corners of the market. Is Carnival one of the most robust corners of the travel market?
People have been into cruises.
Not since COVID. We'll talk about this more next. This is Open Interest.
And it's time now for Social Climbers. The company's making waves this morning. First up, shares of Accenture. They're falling because the consulting firm says its U.S. government work has slowed and Elon Musk's cost-cutting push is taking hold. Accenture's federal services accounted for about 8% of its global revenue and 16% of its Americas revenue last year. Next, Lennar dropping. It's dragging peers lower as well. The home builder's guidance for its margins in the second quarter came in below estimates, and you have Lennar down more than 6.3%. Finally, Carnival shares taking a hit after key quarterly earnings forecasts trailed estimates, and the miss is adding to worries of a travel slowdown. We're going to hear from Carnival CEO Josh Weinstein today at 2:30 p.m. Eastern Time. Matt, have you been traveling lately?
I was in Austin to ride Harleys
For work.
last month, and I'm going to Austin next week to watch the MotoGP at COTA.
For work. This is the problem. People are not traveling as much for fun, and you've got to look. April spring break. April spring break, and April's expensive.
True, but I had fun riding Harley-Davidson motorcycles for work, and I'm going to have fun watching Marc Marquez and Ducati win the MotoGP at Austin next week as well. But I get your point. Certainly, you've got to tighten the purse strings. If you're looking at this kind of inflation and you're worried about tariffs, then you don't want to be spending too much money on something like flying around the world and staying at a hotel, going to restaurants even.
Yeah, for the Americans looking at the stock market, of course, this week is looking like another brutal one. 5 straight weeks of gains. People may be waiting for this to stabilize. The market, interest rates, we'll see.
All right, we're going to talk about how all of this this economic environment is affecting small businesses, because it's tougher for them to prepare for Trump tariffs. In fact, we just got a headline across from the Wall Street Journal that the Small Business Administration plans to announce it's going to cut 40% of its workforce. This is Bloomberg.
Bloomberg.
When the Trump tariffs come into play in 2 weeks, it will hurt small business owners more than billion-dollar businesses. That's according to our next guest, Mike Matthews. He is the founder of Electro Harmonics, the inventor of the guitar overdrive fuzz pedals that you probably know, like the Big Muff Pi. He made them for guys like that, for Jimi Hendrix, for Dave Grohl, for Pink Floyd, for U2, for Nirvana. And he imports parts from around the world that he literally can't get anywhere else, or at least not for nearly the same cost. He joins us here on Bloomberg Television to talk about the impact of the administration's policies. Mike, great to have you here.
My pleasure.
I read the story about you on the Bloomberg a couple of weeks ago, and I thought we got to get this guy in, especially because you have made gear for some of the most iconic musicians of our time. I mean, I grew up listening to David Gilmour play guitar for Pink Floyd, and I think it influenced my childhood just as much as school.
A lot of his hits were using a Big Muff.
And that pedal is one that I think a lot of guitarists will know as well. We want to focus in, though, on the sort of supply chain aspects of the Big Muff and the other gear that you make, tube amps, for example. How difficult will it be if tariffs go into effect on goods from overseas, even higher tariffs, for you to make those things here in the U.S.?
It'll be a little more difficult, but we got to fight through it and make things work.
I think it kind of speaks to what we were talking about in the commercial break. Some of the things that you are importing cannot be found anywhere else.
Well, yeah, or if they are made in the USA, they're they're prohibitively expensive.
Yeah, for example, you have a factory, I think you started a factory in Russia in the 90s to make vacuum tubes, right?
Well, I didn't start that factory. I was buying vacuum tubes from that factory and selling them. But then that factory, and it was a big part of my business, but that factory borrowed money from a Russian bank. They couldn't repay their loan, and they said they had to sell, and they're either going to sell it to me or my competitor. So I sort of like was forced to buying the whole factory because that was a much bigger portion of my business in those days.
Well, for the kids who don't know,
I need to know what a
vacuum tubes are used in guitar amplifiers and high-end audio equipment like the Macintosh stuff that Bobby Weir listens to, and they're expensive, right? So
the high-end ones are, and guitar amps are too, but they sound better than solid-state amps.
Exactly, but what if you tried to buy vacuum tubes for your gear in the U.S.? Would you be able to?
Well, right now, because of the Ukraine-Russia war, there are high tariffs on anything coming out of Russia imposed by most Western countries, not other countries like China. And we do ship from Russia all over the world, including these countries, because the quality of our tubes are so good that they pay that exorbitant extra price where there are tariffs. But hopefully that Ukraine-Russia war is beginning to wind down, come to an end, but I think it's going to take about a year.
But can you buy tubes in the U.S.? Does anybody make vacuum tubes here?
Well, there is a company in Atlanta that makes vacuum tubes, but they are about 10 or 20 times more expensive than the tubes we make in Russia, or some tubes that are made in China. So part of that is the labor, but also part of the regulations on disposal of the waste and other things. So they're not really competitive.
What about from China? How much are you importing from China at this point for the goods that you're selling?
Well, I import certain materials for our sound effect pedals, okay? But when tensions were rising and we were importing from both Taiwan and China. But a few years ago, we started diversifying more and went to other Asian countries on our printed circuit boards. But we still do import a lot from China as well.
If you had to describe the biggest difference for you in the last couple of months with all of these tariff tensions, what are you most concerned about when it comes to your business?
Well, I'm concerned about the political fighting here. We have this $37 trillion debt, and we've got to stop that debt from accelerating. We've got to bring it down. Now, either we could bring it down slowly, but then it's going to take much longer, or we could bring it down faster, make some mistakes, correct those mistakes. But if not, the United States is going to go bankrupt. I mean, who wants that?
Good point. I wonder about your experience with the musicians you worked with in the past. You knew, I guess, Jimi Hendrix personally, for example.
Yeah, we were really close friends. In fact, before he became Jimi Hendrix, and at that time he was Jimmy James, and we used to hang out and just talk rock and roll and this musician, that musician, and I gave him some advice. He told me he was at that time playing with a band with the leader at that time was a pimp on the West Side, and he wanted to get out of that. And I went to a gig, and during the break, he sat down with me. He said he wanted to get out and be the headliner. I said, great, well, then you got to sing. And he said to me, he says, that's the problem, I can't sing. I said to him, I said, well, look, Jimmy, look at Bob Dylan, Mick Jagger. They don't sing, but they phrase great, and everybody loves them. And he said, Mike, you got a point, and I think that helped him. And later on, when he was a superstar, he'd come back from England and be in the city. He always invited me to his recording sessions, and I liked the way he recorded. But that's one story. There's a lot of stories. I've been around for a while.
Mike, is there anybody out there today that you think is another Jimi Hendrix, Rolling Stones, David Gilmour?
Okay, well, I love Jimi Hendrix. He was a close friend. I liked his fluid style. But my favorite guitar player has always been Keith Richards. I just liked his groovy, funky, rhythmic style. And that's my bad, because I used to be a good player years ago. So,
but you don't run across any players like that today? Any kids out there that are blowing your mind?
Well, my tastes on playing are really basically pretty narrow, just that funky bag, and so I really don't listen to that music so much. And even though I like the old rock and roll from the 60s, if I'm driving in my car, I'll turn on a jazz station, even though I'm not into jazz, but just pass the time while I'm driving.
Mike, great having you in the studio. Thank you so much for joining us. Mike Matthews there, the founder and owner of Electro Harmonics. They make the Big Muff Pie. Let's get a check right now on what's going on in the markets. We do see some red arrows, still big red arrows, enough to take us down to a loss, or I should say deepen the losses that we've seen so far this week. Right now, the S&P 500 is down 43 points, and we'll see a loss at the end of the week if we stay at these levels of 67 points, the fifth week in a row for losses on the S&P and the NASDAQ doing worse.
Yeah, certainly we are at least off of session lows. We're going to look at stocks moving this hour because we do have a little bit of green underneath the surface, and one being with Tesla. They're holding gains after Elon Musk urged the company's employees to hang on to the stock after a 50% plunge. Tesla, though, up about 1.5% only. Micron is falling bigly. It's falling more than 7% still. They had a strong sales cast for the current quarter, bolstered by demand for AI products, but Wall Street was unimpressed. And Supermicro higher after getting an upgrade from JP Morgan. Now coming up, the Trump effect on DC real estate. What new entrance to the market means for residential and commercial real estate in the nation's capital. This is Bloomberg. it's time for our Wall Street Week conversation. President Trump has brought new players into the Washington, D.C. arena who are raising the stakes in the higher end of the residential real estate market. But the policy whiplash on shrinking agencies is hurting the middle of the market. David Gura brings us that Wall Street Week story.
The volume of some of America's most successful business people is here now. And we are watching the city shift because of it. We're seeing the market shift. We're seeing home prices rise in the very upper brackets. Very recently, I set a record in Washington for selling the most expensive home ever for $25 million.
Daniel Hyder is a luxury real estate advisor with Sotheby's and the listing agent of 3030 Chainbridge Road in the Kent neighborhood of Washington, D.C.
I think of myself a lot as like an art dealer. How we present and communicate a property's value in maybe 30 to 45 minutes if we're lucky to get a VIP family's time is everything. Usually presidential cycles don't impact the market in such a tremendous way. Usually what happens is that when there's a change of administration, the vast influx of folks into Washington's capital region are folks that are coming to rent for a little bit. What we're seeing certainly in this cycle is just the opposite. This isn't just a one-level closet, it's actually a two-level.
You're serious?
So this brings you upstairs. This house does not disappoint on any level. And there's a lot more here than meets the eye.
In her 20 years as a housing economist, Lisa Sturdivant of Bright MLS has witnessed 4 presidential transitions.
People bring all cash to the deal. We have less inventory of luxury properties now than we did a year ago. Conversely, the entry-level market and the move-up market, there's more homes available for sale. Part of that is those luxury buyers aren't as interest rate sensitive as an entry-level or a move-up buyer is.
The interesting thing to analyze is the tale of two markets. On one hand, you've got this upper end bracket market that is going through the roof right now. And then on the other, you've got a little bit more apprehension due to mostly interest rates being high.
Fears of the bottom falling out of the capital's real estate market started after COVID changed demand and prices.
During the pandemic, the Washington area housing market was sort of on fire, like it was in many places. Record low mortgage rates brought a lot of buyers into the market. Our further out suburbs actually did really well during the pandemic. More people looking for more space, looking to move further out. But even since then, even as mortgage rates increased, we still saw really strong demand here in the Washington area. And now we're sort of in this period where there's a lot more uncertainty in the market.
How much bullishness is there about the future of D.C., given what we're hearing about how radically it might change?
I can tell you, I've lived in Washington my entire life. We are multi-generational Washingtonians as a family. And what I've seen is that Washington is an unbelievably resilient market. You know, well before I was even a licensed real estate professional, you can go back and study the data of 1997 and 2011, and you can see that really what happens in Washington if there's a major global economic downturn is that the Washington market pretty much flatlines. And that, to me, again, is a safety factor of why people would want to invest in Washington. This is the seat of power for the free world. And while parts of it are being downsized, the main apparatus is going nowhere.
That's David Gura reporting on the D.C. real estate market. You can catch Wall Street Week every Friday, that's today, at 6 p.m. Eastern Time. This is Bloomberg.
We've been buying Tesla and names that mimic Bitcoin and other crypto assets like Coinbase, like Robinhood, taking advantage of this risk-off period.
That was ARK Invest CEO Cathie Wood speaking to Sonali earlier this week. Retail investors also seem to be piling into Tesla, even as the stock falls. Direction's double leveraged Tesla ETF has reached a record number of